Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for the 16th of December. This is the last webinar for the calendar year. We're going to be doing some crunching of some numbers. We'll come back with market prices, and boy, we're just going to be booking it for all intents and purposes to see what investments next year will be. I had a client push one my way that I'm going to go with you tonight. Our next year, or our next webinar for the Hurley Investments Market View Commentary, can't type, will be January 6th, 2025. So as a little housekeeping, that's when our next one's going to be. All right, expectations for the West. That's the week and the rest of the year combined. Expectations for this week, rest of the year combined. Anyone know what's happening on Wednesday? Anyone know what's happening on Wednesday? It's kind of an important event. If you are doing your research and if you're doing your own trading, you should know about Wednesday's big event. And there it is. Good job, David, Mary, and Abraham. Looks like Russ made a comment. The Federal Open Market Committee rate hike. It could be a cut, but it's really the rate decision. Wednesday, noon, Mountain Standard Time. So, what does that mean? Flat day tomorrow and flat market until the announcement. It does not make any sense to be placing trades in this time. Anyone know what the announcement's expected to be? Anyone know what that announcement is expected to be? What are we looking for in this federal rate decision? There you go. Good job. It's like 98% probability of a quarter basis point rate cut. So, what are we looking for on Wednesday? What do we need to hear if we want to hear some continued strength going into next year? Maud, good to see you. Glad you're here. What are we looking for? Maybe more rate cuts. Right, there you go, Brian. Excellent. We're looking for next year's plot graph for rate cuts. My expectation, 1% more rate cuts into next year. I'm planning on it. But there's also something else that we're looking for. And if you don't know, go ahead and type some question marks in. To have the all clear going into the end of the year, what else are we looking for in this Federal Open Market Committee? And if you're trading for yourself, these are things that you should be researching and knowing about as we're going through this. So it's interesting. Abraham, you made the comment, if not starting to reduce national debt, it will not take long to happen. So this group has nothing to do with national debt. But yes, if the national debt keeps going higher, then rate cuts will probably come sooner. but they're not supposed to be linked. We are looking for something else here, though. What else should we be finding out in this Federal Open Market Committee? Lower inflation, again, Federal Open Market Committee is tied to rate cuts and full employment. They do not have any effect on inflation, but to hear them talk about lower inflation would be helpful. I understand now, Brian, what you're trying to say, but they actually have kind of kept that out. We have the plot graph for rate cuts. The key that we're looking for right now is a resting period or break from cutting rates. And really that comes down to, will they cut again in January or March? That's the big one. Will they cut again in January or March? So the next year plot graph is for the expectation. What are they looking to do next year? And how quickly will they start? That's going to be the key. Abraham just typed in jobs, and yes, they're supposed to be for the interest rates and for the jobs, but the jobs, we're doing good. The unemployment rate is significantly low. Now the job rate will change, but it is significantly low. My expectations, again, I would expect us to run into the beginning of next year. And then it depends at the beginning of next year if people take profits at the beginning of the year. Probably not, because they will expect through a Trump administration will prolong the tax cuts. So we should be looking pretty good into the end of the year. I found it interesting because, and I definitely want you guys to read it, in the big picture, we just did something that's happened 3 times previously. This is the 4th time, and this is the 2nd time in like the last 50 years. We have had back-to-back 20% plus year returns on the S&P 500. It's been really a pretty simple year. Fear of recession has not been there. Yes, we still have higher inflation than we should. We've got wars in the Middle East and Ukraine and Russia. Will Taiwan succumb to China fully immersing it into its country, which the U.S. should have to stay away from, because ultimately it's not our place. They own Taiwan, so whatever they want to do, technically they can do it. I just found it really interesting what it all means. There was a positive buzz on Wall Street leading up to the election, and an unmistakable buzz following the election. We had about 4% return in a week. It's more fun and games now with visions of less regulation, a friendly tax policy dancing in its head, but the specter of tariff reprisals, geopolitical conflict, deficit angst, and inflation heating up are elements investors should hope to remain under wraps. Playing politics will be less fun for the stock market if they don't. This market may have gotten ahead of itself pricing in good things. Yes, we're trading at 20 times future earnings, way above the standard 21. Well, since post 2008, it's been closer to 24.5. We're way above pricing in good things. We are overvalued as a market. But it won't allow itself to get consumed with the thought of bad things happening. Not now anyway, when the political signaling is a tailwind and earnings estimates remain as an uptrend. Here is your simple answer. And I went through it last week, right? If you are trading or investing, there's a difference between those two. If you are trading and investing, you should have been bullish the last 2 years. And yes, that's coming after 2022 negative 14.6. We did like a positive 24.3 is my memory. This year we're pushing 27%. It's really simple to say the trend is your friend, and don't fight the Fed. It's that simple to understand. We had a great year. This was a good year for Hurley Investments. MSTR, MicroStrategies. MicroStrategies. It's an interesting one. And I'm going to refresh this. Pretty flat day today, even though it was up big earlier. It was up big today because it's now going to be in the NASDAQ. So there's some rebalancing. Their last earnings was pretty good. In fact, their last four earnings have been okay. Fundamentally sound, they are not. No PEs to calculate. Sales sizes were down. Debt to equity, they're paying more than currently receiving. Low, better, but still expected to lose next year. Expected to lose next quarter. Huge book to share, so they've got cash on hand. But with their sales of $500 million, they're losing $500 million. Yet their market cap is huge. Institutionally owned, only 42%. Short interest, 12.37%. They've got a huge float. Beta, 3 times as volatile as the S&P 500. Great gross margins, but their return on assets, return on equity, return on investment, still down. Profit margin is down. Yet these guys are a $400 stock that just recently got accepted into the S&P 5, the NASDAQ. They're one of 2 new stock positions that are entering the NASDAQ. If you check their filings, not particularly good, but they have a huge upside potential. Check their filings. Very important to read through them. Huge upside potential. Huge, 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 huge. So someone said, if they are so fundamentally unsound, why would you invest in them? When you don't invest in Amazon, Tesla, I probably could name a couple more that I've just said, not interested. Let me work some numbers for you. And I'm going to stick the position in. If you have some cash sitting around this year, it might be a real interesting position to be in. I'm looking at an in the money covered call. I'm going to work these numbers just so you can see where we got in. Today, I bought to open. I think we have 300 shares here. 300 shares at a price of $424.15. At the same time, I sold to open a January 26 through 420 short call for $174.82.5 of credit. Net debit in the trade. Pretty simple, 424.15 minus 174.82. And I need my calculator so I can calculate this out for you. Give me a quick second. We're looking at 424.15 minus 174.82. We had a net debit that equaled $249.33, which is also the break even for the investment. Let's do a maximum reward. We sold a short call at 420. Sell to close or get called away at 420 minus 249.33 equals 420 minus our cost base of 249. Sorry, 249.33 equals a profit of $170.67. Or if you divide that by your cost basis is the net debit in the trade. You divide that by 249.33. That is a 68.45% return on investment. Your break even is roughly $160 lower than where it closed at $411 today. You can add puts to increase the return on sitting cash. The but side of it is very thinly traded at an in the money covered call. I put on about 50 of these and I only had 7 fill for people. So it's very, very thinly traded right now. But rarely, if ever, do you find an opportunity for sitting cash to where if you have it sit and it trades right where it's at in the future or higher, that you can get a 68% return on your investment for sitting in a position for 13 months. This is truly unheard of. Yes, we are sitting in positions right now with Meta. We have 360 400s expiring in January. We have 450 500s. In fact, I've got some in here. I should have probably picked this out so I know everything that we have. Give me a quick second. Yes, they could change. We know they could change. We have 500 550s. We have 596 40s. We have 620 700s. And actually, it's not 450, it's 460. And I think I'm missing one. I'm missing actually 2. I can't remember what the other ones are. But yes, I just want to do a thought basis. It is really nice to have high probability trades that are already profitable sitting to close out for an even better return. If you have a red C next to your Meta position, we are trying to close some trades out for a 150%. I think the other one is 164% return on investment. And so they're sitting there. We're not giving away the house. I think we're giving away $1 or $2 out of Ones are 60, and I think the other ones are 50. I'm not sure exactly what they are. But if you have a Red Sea sitting by your trades, we're just waiting to cash in the money on those. All right, what else are they going to go over with you? Last thing. New Thursday suggestion. We are stopping the trade findings and adjustments. Our thought process is we might move to a Wednesday. And we'll do 10 a.m. Mountain Standard Time, open trading. Let's do an open market trading. See if we can type. Q&A session. Where on Wednesdays we're going to be available. If you have any questions, we'll come in for a half hour or so. We'll just answer questions. We'll talk about the market. We'll give a little recap where we're at. We've not been getting the attendance for the trade findings and adjustments. So we thought we just want to give you the ability twice a week to touch base with us. Let's see here. We have 28 of you here today. So for those of you that are here, if you would just send me a quick email on what you would like to see, what you want here. Yes, we will still go over our positions and what we're looking at trading at, things that we find interesting, but we're just trying to do a quick, hey, we want to be available for you guys to be able to ask questions and to know what we're doing with money, seeing some of the things that we're trying to place or what we're looking at out there. We want to give you twice a week that you have this opportunity, but we found a structured event isn't exactly being attended to what you're looking for. So we want to give you something during the week while the market's open that you can get a registered investment advisor to touch base with you and talk to you about what's out there and what we're looking at. For those 28 of you that are here today, please send me a quick email, the khurley@hurleyinvestments.com, and just let me know what you would like, what you're thinking, if it works for you, if there's a time that might work better for you. Again, we don't have anything set in place. We're just trying to find a time where we can be available. And we found most people like a Wednesday versus a Thursday, so they have a couple days to place the trades. So in our reaching out and our looking when people are available when they're there, it seems to be about 12 noon Eastern Standard Time, 11 Central Standard Time, 10 Mountain, 9 Pacific. That seems to be a time when a lot of people want to be talking to investment advisors about questions on trading. We also could do right at the market open. We could do something as early as 8:30. That has been tossed out as well. I'd like you guys to let me know what works best for you. All right, make sure you go through. Micron has their earnings Wednesday after the market closes. Huge update on Micron today. We did a good job of rolling puts up $12 higher. Where will our markets end this week? We're going to go with higher. We believe the interest rate cut and a favorable dot plot for the future is in the cards. We're going higher. Dow Jones technically went bearish. There was an article that it went 7 days bearish. Again, no one really trades the Dow Jones Industrial Average. It is a TV index by all good terms. All it's doing is getting too wide, as we've noticed. As it's gotten too wide, comes right back. Gotten too wide, comes right back. Too wide, comes right back. It happens over and over and over and over. This should not be something that makes you worry. 1, 2, 3, 4, 5, 6, 7 times it's come back. Well, 2000. It's come back 3% or more, roughly. It is bearish, but yes, we would expect it to go higher into the end of the year for these 31 stocks. It is not something we feel you need to worry about. S&P 500, still bullish. It's kind of neat. Instead of coming back, because we would have expected it might have followed that, got wide, came back, got wide, came back, got wide, came back, went sideways here, got wide, came back, looking pretty sideways right here. Last time it went sideways, quick drop, and boom, it came higher. We're looking for roughly exactly the same thing. And then when it comes to the NASDAQ, NASDAQ's on fire. Technically, it's overbought. And yes, we can think it will go overbought. In fact, we are looking for an end to the beginning of the year, much like June and July. That's what we would expect. And we see that happening really with good news moving forward. Again, the trend is our friend. We're doing nothing more than following the trend, to be 100% honest with you. Where will the S&P end on December 2024? If I took a quick look at where we're at, we are pretty flat. Looks like we went above. I'm sticking with the 2. I might go a little bit higher. I'm probably going to go 2.5%, 2.4% for right now. Earnings, not much is going on earnings this week. We have Micron on Wednesday, FedEx, Nike on Thursday, Winnebago on Friday, nothing to talk of. JBL, if you follow that. Economic reports are really big. Tuesday, retail sales. Rate decision on Wednesday. GDP on Thursday. Personal income, personal spending on Friday. This will be the last week where we'll have any volume. Kevin, Christmas isn't next week. I get it. Christmas is the following week. But next week, we're just on watch for some news-driven event that takes our markets lower. There is no concern at this time moving into next week, even though actually this is this week, excuse me. This week, we're watching everything next week into Christmas, all the way through the New Year's. We're just on something weird watch, a new global war watch. There's no reason to be trading. We'll have very low volumes. We should not have nothing should happen. So we're technically watching it, but our expectations are nothing will make us worry. Tuesday, the 24th, the markets close half day. They'll be closed by 1 p.m. Eastern Standard Time. Market closed on Wednesday, the 25th. Thursday and Friday markets are open, but probably bonds are closed. Nothing to worry about. We run into the next year, Tuesday the 31st, half day trading. Wednesday the 1st, New Year's, the market is closed. So enjoy a bit of a vacation. That's what I'm trying to tell you. Yes, we're always watching, so you don't have to. Costco beat on earnings, and I found this very, very interesting. Costco actually got above $1,000 per share. A great earnings, beat top and bottom line. Everything is clicking for Costco. I thought, wow, who would be in $1,000 retail stock? I just thought to myself, that is crazy. It is crazy that Costco got up that high. To be honest with you, it finished today below there at $9.92. But I thought, wow, Costco, $1,000. It actually hit an all-time high. And I thought to myself, you got to be kidding me. Costco, all-time highs. And that was an intraday high, to be 100% honest with you. But all-time highs, I wonder how many stock splits. I wonder what happened to a stock. It's a great investment. Unless you got in at the IPO, which in December of 1985 is when it was last at $1,000. 1985. It is 2024. If you owned Costco on the buy and hold strategy, maybe you just held on to a stock that got back up to its highs 39 years ago. Did it have some stock splits? Yes, it did. A 2-for-1, a 3-for-2. So it came back. That's awful. A 2-for-1, 1-for-1. Yes, there have been some stock splits. $2.3 for one. Nothing recent. The last split was in 2000. So yes, there were some splits, but you like to see it split and get back to where it's been. Shocking that it's taken a stock 39 years to get back to an all-time high. We don't think that way when we're thinking about a bank. We don't think that way when we're thinking about a technology. We do think this way when we're talking about an automobile. But just some things to think about. With an interesting stock. But Kevin, it talks about Meta and Alphabet and Apple, Amazon, Netflix. I get it. It just struck me as very interesting. Well, Kevin, Apple is worse. I get it. But Apple's did 10-for-1 splits and 7-for-1 splits. I just found it interesting on Costco. It gave me pause for thought, so I thought I'd throw that in here. Alphabet shares jumped 6% after Google touts a breakthrough quantum chip. It's funny because some of you said you blew it on Google. You told me it would be $200. What I told you was over the next 24 months, starting last year, it had a target price of $196 to $202. Currently, Google is trading at $196.66. Well, you had that range, but you said it was going to be 200. It might be 200 by the end of the year. Well, Kevin, it's just gone up $26 in the last month. A target price for a year says anytime in that year, it may hit that price. Yes, we did an amazing job this year on calculating and having a lot of our stocks hit that target price, I would think it will still hit that target price. Last week, I think it was on Friday, China talked about its stimulus package yet again. Very interesting article on what it wants to do. Very interesting article on what was moving by way of the Asian indexes. Some of them didn't go as far as they were supposed to. I love this. Elon Musk reveals SEC sent him a settlement demand over Twitter buyout probe. If you want to see how much fun it is having the SEC so far up your butt that they can see out of your mouth, here is an article. I would suggest you definitely go to the link and you can see their actual paperwork they sent him. It is really not fun having the government look over your shoulder. If you do want to make a business out of investing, expect this type of scrutiny over your business, your checking accounts, and your personal investing. Gold hits a 2-week high in the run up to the U.S. inflation data. Not a fan of gold. Really tough to view because you're trying to use supply and demand. A lot of the reasons for people to own gold and silver are because the dollar is going to go to zero or be worthless. It's already worthless. It's not worth anything more than what it appears to be backed by the federal government. It's not gold backed, it's not precious metal backed. In fact, it's tax backed. We will never go to trading gold and silver for food or land or tools or medical supplies ever again. We blew it. But I did want those who are trading gold and silver to understand a little bit about where gold could go to and why. MicroStrategy holdings, why it'd be up big today. Please read through this. Again, I'm looking at sitting money and something that can get a 68% return going into next year. I would not go all in. It is not fundamentally stable, but it is very interesting to see its next earnings event that's coming up sometime in the near future. Please feel free to read through this one. And then a last one, why the U.S. government is saying all citizens should be end-to-end encrypted messaging. We send lots of text messages back and forth. For those of you that have joined me, I have asked you to just text certain information to me only if you have an Apple phone. Part of it is because of my encryption that I have to have on my phone on my end. Part of it because Apple does an excellent job. But definitely I want to have you guys read this on the risks of what you might be sending via Messenger and how easy it is to get it. And then a very interesting article on the stock market's most important stock is faltering, which is NVIDIA, yet the market keeps going. Really interesting to see. There truly is not one single stock that can outbeat the market if it needs to. The market trend is your friend. One single stock that's supposed to be better than all the rest can go against that market trend all the time. All right, guys. Hey, last but not least, last questions for the end of the year. What questions do you guys have that I can answer for you? Yes, some Christmas cards and some silver are in the mail for some clientele. I am back. Again, I apologize for the last year. Working with Jared and the bills my family was facing, I truly was a horrible person. Sent out no thank yous or Christmas cards last year. I do apologize. And for those of you that were able to give me the leniency, thank you very much. It was, I don't know how to explain to you what a unique situation it is having a traumatic brain injury survivor and child in the home. And Boy, that was the hardest year and a half we've ever been through as a family. Lost my niece that same year, COVID related pulmonary embolism. Really difficult year for the Hurleys last year and a half. Well, I guess middle of 2022 till the end of last year. Okay, last chance. Any questions for the rest of 2024? Very interesting conversation. If you don't trade metals, how can I cash in the silver coins? You can actually take those silver coins to any broker. The spot price on silver coins right now is $31.01. So a decent broker will take those for you at about $28. They may actually give you a spot price minus $1. So if you wanted some cash, you could take those silver coins to any broker, any jeweler, any precious metals guy, a pawn shop, and you should get somewhere between $28 to $30 per coin, cold hard cash. All right. Do you think MSTR will go higher because of NASDAQ listing, because funds ETFs will have to buy it? Yes, but more importantly, it's just sitting in a sweet spot of AI that I think it's going to be very volatile. I think the next earnings, it'll knock it out of the park. And even if it comes down, has a couple bad earnings, you have such a great credit that it offsets it truly offsets the risk involved in the stock. Plus, you can add puts anywhere on the way down and make a killing on that to increase your ROI. It's really amazing to have a place where you can sit money with zero growth and take a 68% return on investment. Unheard of, amazing opportunity. 42%. 42% profit, but a 68% return on investment. That's because you got the credit when you got in. Pretty amazing. Kevin, a Merry Christmas and Happy New Year's with family and friends. Likewise, everyone, you guys have a great end of the year. Once again, I appreciate you as friends, as clients. I'm grateful for your business. We had an amazing year this year. So thank you for staying with us. We look to even have a better year. In fact, it's kind of interesting. If you are a Kansas City fan, there is a above average chance that we're going to see history and see the first three-peat in a Super Bowl. There is a above average chance that we're going to have a three-peat in 20% plus returns on the S&P 500. We're going to play those odds. We're going to keep the trend as our friend. Guys, have a Merry Christmas. Have a safe New Year's. And I'll look forward to seeing you guys on January 6th, 2025. Good night, everyone, and have a great year. Bye-bye.